Welcome to Excel Academy, and in this video I will be doing the company law amendments notified on 7th May 2018. This is very useful for your exams. So there are actually 93 sections in the Companies Amendment Act 2017, and this Amendment Act came on 3rd January 2018. But on the 7th of May 2018 there are some notification dates, commencement date. So we are not going to talk about all the 93 sections. In this video we will discuss only about the sections of 7th May, the commencement date. So 7th May 2018 a commencement date has come. So this is applicable for the December of 2018 exam. But if you write in June 2018, it is very good. You are only going to get more marks. Nobody will cut the marks if you write latest amendment. You only think as a common sense. So anyway, let us try to know the format. So this video, to make it easy for you, the format I will be using is what is the old law, that will be on the left hand side of the screen, and then what is the new amendment which has commenced from 7th May 2018. So this is the format of the video which I will be using so that you will understand easily. So before we even go ahead, please subscribe now to Excel Academy to excel in all the company secretary subjects, and also hit the bell icon to never miss a video. Yes, so let us start directly now. What are the amendments which is applicable for the exam? So the first thing is, what is the old law? The old law, now we are discussing about the sections relating to section 117, section 137, all of that. So there we have the forms. So we have to file MGT 7, MGT 6, MGT 14, MGT 15, that is report on annual general meeting according to section 121, or AOC 4, which is according to section 137. So for all these forms, the old law, so when I say old law, it is before the commencement date, which is 7th May 2018. So again I am telling, even students writing in June 2018, if you write this, you will get more marks. If you're writing in December 100%, you have to write this, there is no option. So this amendment is important for you. So in the old law, the additional fees to file the forms is up to 300 days based on slab rate. That means they are giving, like for example 2 times, 4 times, 6 times, up to 12 times is the additional fees according to the old law. What is the new amendment? So the new amendment is additional fees for filing forms will be 100 rupees for every day of delay after 30 days. So before it was, suppose I am going to file the form 60 days late, if the filing fees is 300, so it will be slab rate. So slab rate is 2 times. 2 times means 600 plus 300, 900 is the fees. But today what will happen is, there will be 100 rupees per delay. So for the 60 days delay, 100 rupees means, so I will be paying 6,000 rupees. 6,000 plus 300, 6,300 is my filing fees because of the new amendment. You only see, I have given an example here. So where it is 900, now it is going to be 6,300 because of the delay, because the concept is 100 rupees for every day of delay after the filing fees of 30 days. So 30 days it is normal filing fees. After that it is going to be 100 rupees for every day of delay, and that is the new amendment. Next we go to section 2 subsection 87, subsidiary company definition. So in subsidiary company definition, the old law was that subsidiary definition is based on the total share capital which the company is having. But now the new amendment is subsidiary definition is based on whether a company is subsidiary or not. We will see based on total voting power and not only the total share capital. So voting power is what we have to see to call something as company A, B, C. So if C is subsidiary of B, we should see the total voting power, not only the total share capital. So this is the old law and the new amendment. Next we go to the amendment relating to prospectus, section 26. So here we are studying about prospectus. So in prospectus what happens is, there was a clause, that is clause A and B of the section 26, which said that it is totally omitted right now. So this clause was relating to what was the information and report which we should put in the prospectus. So the old law said that they are given a clear definition on clause A and B what should be given information in the prospectus. And now that has been omitted. So what is the new law? So the new law is in prospectus, every prospectus by public company has to state information and reports on financial information as specified by SEBI with consultation of central government. So SEBI with consultation of central government will tell what is the information and what is the report. So in the old law, section 26 itself was telling in clause A and B. Now that has been totally omitted, and now who should give what is the information and report which we should put in prospectus? Who should give? SEBI, and SEBI should give with the consultation of central government. So that is the amendment relating to section 26 old and new law. We will go to the next amendment. Section 54 sweat equity shares. So the old law said that we can give sweat equity shares to the employees or the directors of the company only from 1 year after the commencement of the business of the company. So this was a very big problem for startup companies. So startup companies used to find this section 54 as not very helpful. So now the new amendment, so we are studying, again I remind you, 7th May 2018 commencement date is there. The Amendment Act is Companies Act, which came on 3rd January, but the commencement date we are studying in this video. So on 7th May it was said that if a company wants to issue sweat equity shares, it can be issued at any time, and restriction of 1 year from incorporation or commencement of business is removed now. So for example, I am going to incorporate a company, and I am going to incorporate a company on May 5th. Okay, so technically now I can issue sweat equity shares even on May 6th. So company is just 1 day old, still I can issue sweat equity shares, and that is the new amendment, and this commencement date is come from 7th May 2018. So sweat equity, now you know what is the new amendment. Now we will go to the next amendment relating to the section 77 and 78 relating to charges. So in charges, this is relating to filing. So we are having the filing time for CHG4, but in the old law they were given clear definition about the filing timings, but the new amendment says that CHG4 can be filed within 300 days without condonation of delay. So in the old law 30 days time they will give, after 30 days we have to go for condonation of delay. But in the new law it is very friendly for the companies. What they're telling is that CHG4 can be filed within 300 days without the condonation of delay procedure. So this is also very helpful. So if you see, all these amendments is to make the life of the company much easier. Next we go to the amendment relating to section 139, appointment of auditor to be ratified in every general meeting. So in annual general meeting every year we used to ratify. So 5 years we will appoint somebody. So 2018 to 2023 we are appointing somebody. But what section 139 was telling is that every year in 2019, in 2020, in 2021 we had to ratify the appointment. This was very funny because we are anyway appointing 5 years, but every year we had to ratify. But the new amendment, the commencement date from 7th May 2018, now it is telling no ratification of auditor will be required at every annual general meeting. Appointment once in 5 years is enough, and we are complied with the law. There is absolutely no problem. Next we go to the amendment relating to independent directors. So this amendment is little bit in detail, we have to understand properly. So independent director, there is a huge definition about who is independent director, what is the qualification to be independent director. So here it was saying that in the old law, which is before the amendment, no pecuniary interest with the company. So a person who should not have pecuniary interest with the company can be independent director. But this was very confusing, and also it was affecting lot of transactions. So many companies complained, and the government came with new amendment where they gave a clear clarification, says that a person cannot be independent director and he should not have pecuniary relationship, but that pecuniary relationship they have defined very beautifully. They have told clearly. So a person should not have no pecuniary relationship other than remuneration as such director or having transaction not exceeding 10% of his total income or such amount as may be prescribed. So in the old law, they simply told no pecuniary interest, but in the new law, they have told clearly what is excluded in the pecuniary interest. So it is okay if the director, if any person is having remuneration as director or not exceeding 10% of his total income, then he can become independent director. He can become independent director. So we cannot say that no pecuniary interest as a general thing. So new amendment is giving clarity now. What is the meaning of pecuniary interest, pecuniary relationship? We will go further within this section because the old law we are studying clause 149 subsection 6 clause C, D and E. So this is clause C, this is clause D. So once we finish clause C over here, we will come to clause D. So clause D talks about further relating to independent director. So if anybody wants to be independent director of company, none of that person's relatives should be holding any security or interest in the company. It's holding subsidiary associate. So this is a new insertion. This amendment they're inserted newly during the current financial year, provided that relative may hold security or interest in the company of face value not exceeding 50 lakhs or 2% of the paid up capital of the company. So why they have given this lenient provision, why they have given this relaxation, is it was very difficult to find independent director because somebody's relative will have some pecuniary interest. So that is why they given clarity. A person whose relative who is they may be holding up to 50 lakhs or 2%, that is okay, but more than that, that means that person is not independent. That is what the clarity. Further, none of whose relatives is indebted to the company, its holding subsidiary associate company in excess of the amount as may be prescribed in the 2 preceding years. So we should not have any relative who has taken any loan from the company. Indebted means loan or any liability. That will affect the independence. Then within that, clause D, the next point, what is the new insertion? None of the persons independent directors whose relatives, this is all about relatives, has given guarantee or provided security in connection with indebtedness of a third person of the company, its holding subsidiary or associate, or their promoters or directors or such holding company for such amount as may be prescribed in 2 years, 2 preceding years. So this as may be prescribed, it will come in the rules, but they're giving a relaxation. So now it is easier to become independent director. Same way here. None of whose relatives has any pecuniary transaction or relationship with the company or its subsidiary or associate company which is amounting to 2% of the gross turnover or total income. So up to 2% it's okay. So even if my relative, so what you should understand, even if my relative has all this, I can become an independent director. Suppose I want to become, my relative is having up to 2% transaction with the company which is of the gross turnover, then I can definitely become an independent director. So all this is about relaxation of the provision. It was very strict. Now they have relaxed in all this independent director. As you can see, they have relaxed it. And further, 149 subsection 6 clause E. This is also about independent director. So they have given a proviso, new addition, provided that in case of a relative who is an employee, the restriction under this clause shall not apply for his employment during the 3 preceding financial years. So they have given a further relaxation. So for 3 preceding financial year, this will not apply, and that is why it is easier to get independent directors now. We will go to the next amendment. The amendment is related to section 164 subsection 2, disqualification of director. So there was no such provision. This is a new insertion. So what is the new insertion over here? So the new amendment is that a director appointed in defaulting companies would not be disqualified for 6 months from the date of appointment. So even after appointment, 6 months he will be having a valid directorship, and that is the new insertion. So now, if a director is appointed in some company which is defaulting company, we will not call it as disqualified, and that person will be holding directorship for 6 months because he is not disqualified for 6 months from the appointment. This is a new insertion. Next amendment is section 167, vacation of office. So again it is a new insertion. What is the new amendment? The director vacates office of all companies except the defaulting company. So for example, there is a director in four companies A, B, C, D. So A is a proper company, B is a proper company, C is a proper company, D is a defaulting company. D is a defaulting company. So now if we have our director, let us say Mr. Varun is our director. So Varun is a director, and if Varun is director in four companies, then the director vacates office in all the companies except the defaulting company. So he will vacate his office automatically. He will lose his directorship in company A, in company B, in company C, but not in company D. Why? Because if he loses his directorship, this was a loophole. This was a loophole in the old act. So what will happen is he will escape from the law, because if he will vacate his office even in the defaulting company, he will say, I am not liable, and he will escape. So that is the reason why now the section 167 is giving us very good clarity. The amendment is very welcome. The new amendment says that the director will vacate office of all the companies except defaulting companies, because the government or the authority, anybody can take action against him. He will still be the director of the defaulting company, and defaulting company can take action against the director. Next amendment is very simple, relating to form DIR 11. So when a director was resigning, in resignation of director, what used to happen is the act used to say that the director who is resigning should file form DIR 11 and the company should file DIR 12. Company had to file DIR 12. This was compulsory. But then the government has given again a good relaxation. Now they're saying that DIR 11 is not mandatory, it is optional. That means if company will file DIR 12, it is sufficient. So we don't have to go for DIR 11. It was mandatory in the old law. In the new law, now commencement date from 7th May 2018. From now on, any director who will resign from the company, if he gives resignation letter, that is sufficient. He need not give DIR 11. It is not mandatory, it is only optional. Yes, if he wants to, he can, because it is optional. It is not removed. It is not mandatory. If he wants, he can file for his own safety, for his own proof. He can file DIR 11 also. Next amendment is section 173. Section 173 talks about the participation via video conferencing. This is a new insertion, so there is no old law over here. The new insertion is that director more than quorum can participate in any audio visual mode. So what, let us take example. Suppose there is a private company, and in the private company there are, let us say, 5 directors. So two directors who will be personally present. So we have Abhinav and Lalita. 2 directors will be personally present. 3 directors will not be there. 3 directors will be in different location. So 1 director will be in USA, 1 director will be in England, 1 director will be in Australia. So these 3 people can participate in any audiovisual mode, because 2 directors are forming the quorum in a private company. They are personally present. So under 173 now, it is very easy for company to organize board meeting, because director more than the quorum can participate in any audio visual mode. So the director in USA, England, Australia can participate in any audio visual mode. Any audio visual mode means even we can take Skype, WhatsApp, FaceTime, all of that. So because the directors are personally present are 2. So this is only if quorum is present, they can participate in any audio visual mode. The other people, so these 2 people should be quorum physically personally present. Yes, so that is the amendment. Next amendment, audit committee. It's a new insertion of proviso, so there is no old law over here. What is the new amendment? The new amendment is where audit committee does not approve the related party transaction which is under section 188, it shall make its recommendations to the board of directors. So it will have a provision where the audit committee, if they don't approve, they can make the recommendation to the board and board can take a decision. So this is again to have a little bit more clarity. This amendment has come. This is very welcome. Further in the same section, Related party transaction which is not ratified by the audit committee is now voidable at the option of the audit committee. So this is the new amendment. This was not there in the old law. It's a new insertion. So now if there is any related party transaction which is not ratified by the audit committee, it is voidable at the option of the audit committee. So this is very, very important. You should write this amendment in the exam. Next amendment is section 178. There they are giving some clarity. There was a problem in the drafting. The nomination and remuneration committee, they used the word listed company. So now they have given a clarification. It is clarified that public listed company should form a nomination and remuneration committee. So under section 178 in the old law, they simply said listed company. So listed company means some companies like private companies can list their shares. They can list their shares. They cannot trade it, but they can list the shares. Even private company can list. So then there was confusion in the law. So now in the new amendment, they brought the clarity and they said that public listed company should form the NNC committee. Within the same section, we have another new clarity which is given. The nomination and remuneration committee shall specify the manner for effective evaluation of performance of the board, its committees and individual directors to be carried out either by the board, by the nomination and remuneration committee, or by independent external agency. So this is the new thing. So even an independent agency, outside person, can carry out the implementation of this section 178. Further, within the same section, we have another amendment. The policy, the nomination and remuneration committee, what will they do? Nomination committee, they will select the directors and they will fix the remuneration of directors, correct? So now even an independent agency can do, we just studied that over here. Along with that, the policy should be on the website of the company and in the board's report. The web address should be in the board's report, the NNC committee policy. Next amendment is very, very welcome amendment, and this is going to make it very easy for companies. Loans to directors and other parties. Now, loans to directors and other parties can be given by a simple special resolution. This is so easy for companies now to run. Before it was prohibited, we cannot give, or there are so many rules we cannot even follow. Now they are telling very simple, members are the owners of the company. If members will agree, okay, let us give loans to directors, then they can just pass special resolution and it becomes very easy. So in EGM we will pass and it's very easy to give loans to directors and other parties. So this is the new amendment. Next we come to very interesting section 403. This will help lot of practicing company secretaries because now the additional filing fees, I told you in one of the beginning slide, there is slab basis up to 12 times there is slab basis. So if the highest fees was 600 into 12, so that time it used to be 7,200 plus the normal fees. 7,800 was the maximum fees I used to pay for delay payment. Even if I file on the 300th day, 270 plus 30, 300 days I was getting time under section 403. So even if I file on 300th day, my filing fees was only 7,800. So all the companies used to take it very easily. They're least bothered. They're not even responding to the call of company secretary like that. But today, if I file on 300th day, the minimum additional fees is 100 rupees for every day. This is new amendment. That means 300 into 100 rupees. So how much it will become? 300, 3,000, 30,000. 7,800 and 30,000. So now the company secretary and the practicing company secretary will get more business because company will not want to pay 30,000. They better pay only 300 or 600, whatever is within time limit. So now everybody will start filing forms within time limit. Very good news for company secretary students, practicing CS, everyone. Very welcome new amendment. Next we come to what is section 410. This is very simple. The old law said that the National Company Law Appellate Tribunal can hear appeals against order of NCLT only. Now they have told that NCLAT Appellate Tribunal can hear appeal against order of NCLT and NFRA. So I am not happy with NFRA decision. Suppose there is a chartered accountant who has been fined by NFRA. Chartered accountant is suspended by NFRA. So chartered accountant today can go to NCLAT under section 410 because of the new amendment which says that we can go for the NCLT. Next we come to the concept relating to the section 435, 438, 439 and 440 special courts. So here we have a new amendment that is just the special court and speedy trials have been notified now. Very simple. So now, so all the matters which are criminal in nature, we are going to go for special court and speedy trial. We have a video about special court where Abhishek has spoken. You can have a look at the video in our YouTube channel. Next we come to the last amendment in this video, section 186. So 186 relating to loans guarantee investment security. So here what happens is that now new amendment says that this section is not applicable if we give loan to employees. So this is also relaxation. So if you see, all the amendments is to make the life very easy for company, to give the confidence to company, to give freedom to company. So if you like this video, please like and subscribe our channel Excel Academy, your one-stop solution for CS course. And I hope you will write all these amendments in the exams. And till then you can watch our other videos which you can see on the screen now. All this is going to help you excel in company secretary course, and this is something which you have to do regularly and study properly. You will definitely clear the exam. We are always there to help you.